What's going on, guys? Time to talk about the upcoming week in the market. So we're going to start with Qs for a couple different reasons here. We had Qs already trending into all-time highs for multiple weeks here. So if you go to the weekly chart here on Qs, you can see that the Qs have been rallied into the all-time highs much faster than SPY. Now, SPY is also obviously the better market and the better trader of the two, but it hasn't had as much time having this beautiful, crazy breakout. It lagged just a little bit, right? So first thing I'm going to do, I guess I'll start with SPY real fast since we're here, is I want to talk about the bottom of last year, the bottoming market, right? And we anchored a VWAP down here, and this is the center in the purple. And I want to see the trend because we are in an uptrend, right? Higher lows, higher highs are all stacked up. But generally speaking, we have a sentiment that happens once we get somewhere into this anchor VWAP that it doesn't want to be. So from this low, we have an opportunity to see the hype into some of these bands of the anchors, and a lot of the time between the 2 and 3 anchor, that is a danger zone from an anchored VWAP at a very pinnacle point like this. So what does that mean? Well, if you look right now on this FOMO rally, squeezed up in all-time highs, we are in +2 to +3 territory. The last couple times we were up there, we did get pretty close to that red line, but the last 3 times, this has generally been a really good pullback zone. Now, we can reset these anchors over and over again on lows and highs and whatever we want it to be. So if we wanted to move that anchor up to this one and do another one, well, this one tells us that our anchor from recent lows is not letting this thing go past about +2, right? So +2 on the anchor. So if this is the center, we got 1, 2, and 3. And this also calls for a little bit of a pullback because every time it kind of got shied into that, we had one big push here, a continuation flop that did not work out. And then we have another one ranging into that too. But of course, from that swing low last year, we have an opportunity to kind of fall from that first VWAP, right? So let's get into Qs because SPY has that good resistance. Now, Qs, we have a better weekly pattern here. And you know us for how we break down our trades. We come into the weekly and we work ourselves down on how to create a trade plan. So we start with the weekly, go to the daily, go to the 4-hour, and work yourself down to find the strongest to the weakest levels. Now, we have a doji low body, right? So we call these low body dojis. They're obviously under the 50 of the weekly candle. The doji is low. So we have an opportunity for continuation down for a little bit of a pullback from this weekly if we stay under the body. So regardless of where we open on the NQs, and let's see if it drags back up here a little bit and has one more little push and then continues down, which is fine. But if it enters into that body, cannot hold above that body, we're going to start draining back down a little bit, which was what we're looking for right now. Now, if we go to the daily chart and walk it down just a little bit, here's where that weekly doji body is. And that was where the gap fill and where we called some of these long bottoming trades coming into the gap fill, right? So we had a pretty nice gap right here, and we had some long scalp calls. I traded live right here where we had filled that gap and went long. So we had some really good gap interaction already on the daily, right? But let's start looking at some of the volume profiles and POCs that are not tested to the left, right? So we have multiple gap ups on Qs. We have the one that finally closed right here, 2 and number 3. Now, back testing the conformational volume profiles, we talk a lot about the high volume ranges right here. We use these to day trade on the side. Or for the intraday. And whenever you see these large traded limit order zones, you have opportunity to find support resistance. Okay. So let's go back to a longer standing time frame on the Qs here. Let's go back to a 4-hour. We can start here as we go down from the weekly to the daily to the 4-hour. Let's check our volume here. And what I did before is swing high, swing low in current session. So we're just going to anchor volume profile, go from here to here. All right, so we're going to give us some high tradable zones, and then on the 4-hour chart, we're going to have some back test of prior POCs and prior volume area highs that have not worked out on futures. Now we're going to move to the NQ in a second here, but I just want to go over Qs real quick. So if this gap is going to do 2 things, we're going to have an opportunity to potentially bounce here. So we had filled the gap, then it consolidates the gap, right? It pushes up one more time. Well, if we look to the left, we have some high area of volume zones coming up that are going to be interesting resistance points. So right here, highest point of volume. This one matches up perfectly with the right side. So this would be a zone I would watch for potential resistance. My resistances are usually orange. So if the gap fill holds, right, and rallies back up a little bit here on Monday and decides to travel up with some data like we were talking about Tuesday, Wednesday, And Thursday, we have a monstrous amount of data, a little bit big on Friday there with the next momentum over the farm payrolls as well. We have an opportunity to push back up and then break said POCs. So we have a high-low POC right here under 422. It's the one we just drew from high to low, and these POCs generally need back testing, right? So there's an interesting volume area here that we had found in the 4-hour as well with these POCs, and let's see what they match to. So if the gap holds, we have a lower high opportunity, breaking through some of these very big volume key points. Obviously, here's the POC. So the biggest amount of support, which we could fall to if we do not bounce the gap here, is going to be this POC right here, and that's in the way of our heading to the downside. So if we get one more little trap back up, it's in general, that's going to be the break of this super large channel here. It's the POC of the 4-hour we just did and very large 422 area. Now, if this comes down for the break where we're inside, we have an opportunity to come back down to maybe find gaps, but there's a couple different areas I want to talk about first off, and then some of the FANG stocks that we had seen. So if we go to the NQ, stick to the 4-hour, and we're just going to use the same exact methods here. Swing high, swing low, get to where these volume nodes are, because the futures do trade obviously longer than Qs. So we have a little bit more data here. Now, from the volume area high, which is going to be an orange up here on the pullback, we have our POC, right? And this POC overlaps multiple POCs, and that is tons of catalysts for us, right? So just sub 17,500, we have not one, not two, but three different POCs utilizing the high-low range, and then the POCs of this trade day and this trade day. So these two mixed with our large swing high-low, we are going to use a channel, right? And this is going to be one of the biggest traded zones between all of those POCs. This is the break point. If this is the break point coming into sometime this week, this is the continuation level that we need. So you're going to find that we're going to hit here, which we already did, all three. We bounced it. We called that, right? That was like the gap fill area. So we had a very beautiful gap fill long here that we had called. We played that one. Now we have a potential to kind of keep these lower high and lower lows going opposite in divergence of SPY, because Qs is running a little bit more to the downside than SPY is right now. So let's say we break this 17,500, which we closed very close to here. And we open up or even gap it. Where do we go? Well, to the downside here, we have an opportunity to break these last little big volume zones. So underneath this triple POC, we are going to fail down to some bigger zones potentially. So what is another back tested POC we have from our high low swing? Well, there's one right here. Okay. And look at how far of a volume box we have open right here of no orders. There's nothing going on here, right? So the next really big positional under the triple POC, underneath these guys, the next huge one, there's only two. Notice there's a volume area high here. These are okay. These are so-so. These need back test too. Boom. So from the trade day on the Friday the 19th, we have a volume area high that was never hit, okay? So if we break zone one, target one is 17,359.75. And that could be a bounce point for the fresh low, right? Hits here. If it wants to wiggle around for a little bit, back test the 17,400 areas, and then finally break that volume area high, we're going to come back down and test right here at the next high volume zone. And that's going to be leveled up and matched with the POC, okay? So POC of untested charted territories here. We have no territory hit on 17.32, and we have no territory hit right here on this POC of 17,232.50. Now, if we look to our left, that obviously matches up with another very high volume zone. So we have another huge zone right here. So here's your targets for if this week starts to signal those lows, starts to signal those bottoms, and what are we going to be worried about the most? Well, Q1 earnings, right? So we're going to go over a couple little things here on the MAC and RSI and what we see developing. Now, we already talked about a lot of this stuff. This is just a refresher, but we're going to go over the RSIs and the MACs and so on and so forth. So target one, if we hit the break point of 17,000, just under 17,500, this is going to be the biggest point. Target one, 17,359.75. Target two, 17,200 and change, okay? So those are going to be your last or your downside targets if we get the metric, if this little head and shoulder starts playing out, and that's if we get further metrics. Now, Intel helped us out with some pretty crappy earnings. Tesla helped us out with some pretty crappy earnings, and that's going to help us. Why, right? Why is Intel going to be one of the bigger things to watch for that earnings dump. That's because it has to do a lot with AI and chips, right? So if you know anything about obviously NVIDIA and AMD, they've been absolute monsters holding up the market, holding up the Mag 7, so on and so forth. So these guys are front runners. Now, with very poor earnings on something minorly in this little sector, in this little friends group, we could see that potential carry through, right? So let's take a peek at some of these oscillation indicators and what they look like on the daily, 4-hour, and work ourselves down. On the daily chart, we have a little bit of histogram divergence here. It's back and forth. It's just starting the dark green, light green transfer where we got a wave and we could potentially head back down. The RSI has a lower high just starting here on the daily, and this is going to be AMD. We're going to go right to NVIDIA. It's going to show us a little bit worse. NVIDIA is much stronger than most, but again, we have a tiny little bit of a histogram roll in the daily, and we are still burnt up pretty much from coming off that 80 RSI. Now, RSI, like these oscillation indicators, they're lagging, right? So if there's divergence, you can look for a play coming into it. It doesn't mean it's going to happen right away. The last time we were hot back here in June was a gap up. And what did it do? It held all of the price action because it had a catalyst to do so, right? Earnings. So if earnings comes into play right here and a catalyst pops back up and we say, okay, well, the earnings is the catalyst to pop this up. Is that a good technical analysis play to take? No, psychology trumps this tenfold because this is an earnings gap and go, because there's a huge gap and go. So these aren't going to matter because hype, fear, and greed, and the catalyst of the ER being insane with AI and everything else, that was the big characteristic of NVIDIA's next big rip run, right? So now what's our catalyst? We don't have earnings to worry about, okay? So all this fake stuff right here on the oscillation indicators, we're not worried about. Now we have a regular technical analysis play with some topping action on the Qs, so we could actually get a little bit of continued market weakness potentially. So if NVIDIA wants to slowly calm down a little bit up here, or even if just 2 of the Mag 7 happens to help us out here with the following the chips, we could see this hot actually come back down a little bit. Right? It doesn't have to do much because we don't have any back-tested supports down here under, 520 either. But the oscillation indicators are showing you that we can. If we take a peek at most of the other ones here, we're hot on RSI here in the Googs. Again, catalyst is horrible economy and fake GDP. That's what we see a lot of the time. Layoff, 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 layoff. All the companies laying off. Forward guidance, slow down. The economy is absolutely propped up on garbage, like always. It's been like that for 15 years, and this is nothing new. So when we see these technical bias indicators that can come up and start getting hot, can we go a little bit higher on some of the Mag 7? Sure. But if we start to see the Q1 earnings crack, if we see the big boys start to crack, when we get the magnificent 7 ERs to crack, that's when we have an opportunity to start coming down. I'm still thinking mid-February before we even see some big signs of big cracks, but the pull down is going to be starting soon here. So taking a look at the last couple here, we have Meta still on that hot side. And again, it doesn't matter. Netflix is something that we can't look at because of that earnings catalyst of hype, fear, and greed takes precedent. Amazon, regular technical analysis, earnings is coming up. So let's see what Amazon gives us. A couple of our other big wigs here. Let's go back to Apple real quick. This has one of the better sell-off narratives after Microsoft had swapped cap with Apple, Microsoft taking the lead in the markets. So this gap up right here, look at the individual pattern play. We had a little bit of a big W back here. Usually it generally comes down to the center of the W before it pops again, right? So we had price action come to the center of the W, make another run, but that just lower high. Now look at the indicators here. The indicator has been watching for quite some time here in Apple, and it's had a little bit of, static. So if this is the next lower high on the RSIs, this wave goes back through and we actually go into a sell signal on the MAC, where the MAC is going to be able to get in underneath that 0 line here and actually produce some lower lows like it did back here. Do you notice the MAC, very similar to this time frame right now that we're working with, and price action is we have a downtrend. Now this is completely opposite with pricing that we have, but this is what we're looking for. It's going to come from the MAC low, create a little bit of a green buy bubble over the MAC 0, and then come back down for fresh lows in the MAC. Same with that RSI, needs to be trapped in the bottom channel, right? So if we go back into current standings here, we're still in an uptrend. We got higher lows. Now we're in a consolidation chop, right? So this uptrend's kind of busted. We had a downtrend, we had it up, we had a double bottom, but it's still lower high, so we don't have amazing uptrend potential. And now we are still looking for that MAC to go over the little bump and come back down to fresh lows on the MAC. Same with the RSI, get back under the 50, trend in that bottom part for a little bit, and come back down and test some of the volume areas that we even have on Apple. So if we came back up here and we started utilizing our anchor volume, coming back down, swing high, low, you can see it lost the POC. So a lot of the times, what do we have for the walk down here? Well, we're going to look to our left. Daily chart says next zone of interest here in Apple. So the continuation of the market potential down to here, which is our second highest traded zone besides the recent highs that we have right here. So if we grab this, chart this little guy out, that matches up obviously with our right side. And our next one is going to be right here at the gap. So again, a lot of tickers are showing us this interesting break of volume here. Big gaps between zone 1 and zone 2, just like the Qs are, and that can help us out here. So going back just one more quick time to the NQ and realizing that those things that we went over for 17,000 coming back down, we have certain gaps to be filled on future starts, and futures don't generally leave gaps, right? We have those contract changes. If you go back on the daily chart, you would have to look very hard on Qs to leave daily gaps, okay? Very hard. So this is my last piece of info. Gaps are my favorite thing in the world. So if these gaps will tentatively eventually fill no matter what, we do have some light at the end of the tunnel with the gap and go that we had here near its POC, right? So right now, again, looking at the Qs quick, froze the trading view, always happens. Volume area high, gap that needs to be filled, mega volume. So if this happens to turn around, and this might not happen yet, this might be the February break, but if we get one more low down, test here, pushes back up, finally breaks the 17K zone, the next zone is going to be almost 1,000 points down on that pullback, and I think we could easily get that, right? Because the last couple of times we've had mega runs up, and this is the sentiment October through September, and then the last little kind of pullback we've had didn't really, accumulate too much, so we are due for one, right? So let's keep paying attention to our Qs. We have a top-down VWAP again here on all-time highs. Let's do the bottom real quick so you can see what it looks like on the Qs here. Let's get our anchor. Let's get the very lowest point of interest here. And it is going to tell you again that we're just starting to near into that +1, +2. So this anchor again, once we get up into the 2-3 zone, 2-3 zone, 2-3 zone, kind of half pace there. Now back up into, well, again, +2, +3 zone, we have an opportunity to kind of fail back down. Now, could this push back up and manipulate up and so on and so forth? Of course, that's the market's always a sham. But if we start to see the signals drop, the VIX comes back up, the Dixie starts moving, and our last precursor here, we have junk bonds and oil starting to finally break out. These are good indicators. We've been watching CL for quite some time here. For this base support, you had huge consolidation here, right under that 68. Oh, there we go. We're going to use one more time our volume. Where's my drawing anchor? It's just gone. Okay, there we go. There we go. So this last bit of information here on oil up, light crude oil, this can be a signal of a pullback as well. It's got a beautiful W as a pattern. It held some prior consolidation very well. And if you look at our volume, we are now above POC here and here, right at 72. And if that POC broke out, where are we going to go? Usually back to volume area highs, right? So if you look at where the price action currently is, we don't have a whole lot of box stopping us with big resistance until we get upwards of 80 plus, or at least $80 right there. And just, a lot of the times it can move past just a smidge, getting past the boxes, right? So if price action comes back up, it'll boost through some of these zones. It's hitting its last one right here. Let's say it takes a little bit of a relax, comes back up to the volume area highs, and then who knows after that, that could potentially, create some big waves. But for a temporary pullback, we're still suited for one, as we see really good support here on oil. You have junk bonds. You can look at some of the yields here too. We could start picking up here again off major support to create a lower high. So if these start to rise here a little bit, inflationary fears, and then go back down, we're still looking for longevity. We're still looking for all-time highs to continue, but the small pullback here into that mid-February, March is going to be a decent little one, and that is still going to most likely provide a dip buy as we further our adventure here into the markets, and then following all-time highs, because this close to 500 will probably magnet somewhere in between that and get closer to this band on the next move up. So we come back down here, consolidates here for a little bit, closes one of the gaps, so on and so forth. We see it, and then later on, quantitative easing maybe has a knee jerk, and then we come back to finally resistance. It's still going to be running, but that big pullback still has potential. I don't think we're going to come back down and test some of these massive gaps anytime soon. From our SPY rip roar here. So if we do kind of happen to pull back, we don't have much of a gap magnet except for way down here. I don't see that pullback happening unless something catastrophic, war driven, or mainstream catalyst comes out. But to that gap right there, it's like 10%. Is that possible? Absolutely. We have sentiments that are regular 10% from the October to December, 11.5% there. That generally speaking, of course, in an election period, we do not have any form of recession, depression ever in the history books. Do we have pullbacks? Of course. Mini market crashes? Sure. But do those get bought up? Absolutely. So stay on the right side of the play here. I don't think we're going to be testing anything too crazy that backside, and try to tune in for the next, and we'll see how this week plays out. I will be back live streaming Tuesday, as I do got chemotherapy starting 7:30 a.m. tomorrow, and I'll see you guys after that.